Bank stocks moving in opposite directions, at least. J.P. Morgan, as you see, the name that's up. We got Wells, Morgan Stanley as well. Another earnings season for the group. Of course, we get more next week. Leslie Picker tracks all of them. Can fill us in on both the earnings, and I guess we've also had some conference calls as well. Leslie.
Yes, in the middle of those, David, a very mixed response this morning, perhaps a reflection of the continued uncertainty that's out there. Despite decent first quarter numbers and stable outlooks, the earnings call, as I mentioned, for the three underway. Nearly every analyst question on the J.P. Morgan call this morning encompassed some kind of macro question, unsurprisingly. Chairman and CEO Jamie Dimon said many of the issues will be resolved for better or for worse in the next 4 months, but Dimon reiterated his belief that geopolitical risk is paramount.
Most important thing to me is the Western world stays together economically, when we get through all this, and militarily, to keep the world safe and free for democracy. That is the most important thing. I really almost don't care fundamentally about what the economy does in the next 2 quarters. That isn't that important. We'll get through that. We've had recessions before and all that. It's the ultimate outcome. What's the goal? How can we get there? And it's literally that.
Now, any major recession concerns not yet baked into this morning's earnings reports. Guidance on net interest income, that's the profitability metric for loan making, was unchanged at Wells Fargo, slightly higher, actually, at J.P. Morgan for the year. However, J.P. Morgan did set aside nearly $1 billion more for reserves, which it said was driven in part by changes in the macro outlook. For J.P. Morgan and Morgan Stanley, revenue growth was largely driven by equity trading, which saw more than 45% jump at each of those firms. I spoke earlier with Morgan Stanley CFO Sharon Yeshaya, who said they saw an increase in client balances and higher activity associated with the tremendous volatility in the first quarter, especially in derivative products, guys.
Have you heard anything, Leslie, about, I played a little bit of a soundbite from J.P. Morgan CFO, not seeing a lot of distress with the consumers, but
yes,
just, the fact that we have credit risk rising, banks usually have a pretty good idea of what's happening on the credit side. It's been really strong. What do they expect?
Yeah, I actually, it's funny you mentioned that. I heard that soundbite that you played, and there's another one from this morning, the Wells Fargo call, where they talked about the consumer, and Charlie Scharf, the CEO there, says, I was just pulling that up real quickly, that their internal indicators continue to point toward the strength of our consumers' financial position. I was interested in hearing that. Consumers have remained resilient, and debit and credit card spending patterns have remained stable. An interesting thing also that we heard on the J.P. Morgan call from CFO Jeremy Barnum was this idea that a lot of the spending patterns they think are attributed to some of the pull-forward effects where consumers are trying to buy things in anticipation of rising prices down the road, which I thought was a pretty interesting marker given what we're seeing with regard to the macro picture.
For sure, Leslie. Did anybody get questions, or was there any talk about the extreme kind of financial market stress that we see currently? It's obviously not from first quarter numbers, but references to extreme volatility and what that means for derivative product flows. That's one thing. But in terms of whether the banks like J.P. Morgan and Morgan Stanley are seeing anything that looks a little bit shaky.
Yeah, that was definitely a question that was on the J.P. Morgan call asked to Jamie Dimon, who talked about the Treasury market in particular, and he predicted that ultimately the Fed will step in there. He said based on rules and regulations, I'm not sure which rules and regulations he was referring to on that front. He said they don't have a need to at this point in time, but predicts that ultimately they will need to step in.
Well, that's pretty interesting. Guess the market's going to test that. 455 on the 10-year right now, heading north. Thank you, Leslie.